minutes. We'll kick it
Yeah,
off.
give me a second. We'll kick it off.
Morning, Terrence.
Good morning. Can you hear me?
Yes, sir.
Yes, we can hear you.
And see you. Looks like it's working.
Hey, we can see him. I know, Maria, you need some glasses, probably. I'm just kidding.
Hey, last week we couldn't. It was we could hear but not see. I remember. Right, Terrence?
Yes.
See? Try maybe
Oh,
you
last,
remember.
it was last week. We're talking about this week now. 7 days went by, I got you on that one, Maria.
Oh yeah, you did.
Hey, you
Let's
just,
move
you
on.
just set it up. I'll have to just go a little bit. That's it.
I got you. I got you.
Oh, it's gonna come back to me this week. I can't wait for that one.
Oh man. Oh man. It's my favorite.
Okay.
Okay.
Sandra, there's some link issue on the chat. If you see there's some, let me share that. Rimcha, do you see on the masters? Oh, thank you. Thank you. All right.
Okay.
Are we in the right meeting, Rimcha?
I am checking that right now. I think Gisella's here. She's joined.
Oh, cool. All right, cool. All right, thank you.
Maria,
There
you
was some time in there or
host.
something.
You'll clean out the bots.
Oh yeah. Yeah, Sanjay. Come on.
Thanks.
Think I wouldn't
Thanks,
do
Maria.
that. I already got rid of 2 of them.
Is there an automated way to just not allow that? But
I
yes, I don't
think
think
it's a
there is.
system-wide, Sanjay.
Then I wouldn't have a job in the morning. Just want to feel needed. Okay, guys.
Sounds good. Hey, it's a job security, right? We should not be worried about the AIs. It's right there for all of us. We got something to do.
Hey, so interesting podcast I was listening to yesterday, and it was talk about what do people do whole day, right? And there is a kid's book on it, and then there is some research done, some journal papers, and then some research recently. But the key of that was looking over the last 100 years to today, the working hours per year has been decreasing. Like people used to work 3,000 hours a year, and then that changed to, as we industrialized, that changed to more or less 2,000 hours a year. And it's on a downtrend now. And some of the research, the trends is suggesting we're going to end up to 15 hours a week, which is approximately 800 hours a year with the technology the way it's evolving. So I don't know. That's the
I feel like it's the other way around, right? It's people. We are working more, but not for a particular employer. We have a bunch of things. If we stack together, you are working much more than before because the cost of living is high. So I hear you, Sanjay, but I don't know how many employee relationship, right?
yeah. So there
Think
is
about that for
a
a second.
focus also, right?
Yep.
Anyway, it was an interesting podcast. Maria, there is one still there. I don't know which one. This one.
Linda goes 15 out fabric. Yep. Good job. We are with you.
Yeah.
Yes, it's like those Instagram videos. Let me show you those top secret websites. You're gonna buy a jet with it tomorrow, right? So it's one of those. Sanjay, you want to kick it off with that? I want to share the screen.
Maria, we still have one.
Lisa's one, I think.
There.
It came back.
Okay.
I got it now. We're good, I think. I'll keep watching.
Okay, guys. So our Monday morning call, we share some of our internal workings of Massive Capital, our group. So we request no calls, no bots. No bots inside the circle, and Massive Master students only for this. So anything you hear, please keep it confidential. Keep it within the group. We share openly. So use your discretion on what you share or talk outside. if in doubt, we're only, the groups, you can ask in the groups and please clarify. So with that said, new members, who has not introduced themselves at all so far?
This is Jason. I have not.
Yay.
Jason,
Go
go
ahead,
ahead.
Jason Himes. I'm in Houston. I was part of the Cree group with Phil and Shanoa, and I'm glad to be here.
Welcome, welcome. To that point, we have the two groups merging, Cree from Phil and Shanoa side, Massive Masters from Massive Capital side, and we are working on integrating the two and coming together. So it's a bigger, better program with a lot more value. So combining the best of both sides. So thank you, Jason, and glad to see you here. Who else hasn't introduced into this group so far?
That would be me. Can
Hey,
you all hear
Kishore,
me?
go ahead. Go ahead, Kishore.
Good morning. I'm Kishore Thakur. I'm a Frisco resident. My passion's IT and real estate. So during daytime, I'm working on solving some IT problems, and then my passion's real estate. So glad to be here. I've been part of a Big Dog program for the last 2 years. I'm excited to join the commercial side too.
Welcome. Okay, I think Gisela, are you available for intro?
Hi.
Hi.
I'm Gisela, here because I'm very interested in commercial real estate, and I have been with Big Dogs for about 5 months, and real estate really is, the way to go. So I'm jumping full into this experience.
Awesome. Welcome.
Oh, I'm from Dallas.
Dallas, yes. I was gonna say location is good. Okay. Welcome. If nobody else for intro, I'll move to our market update. So, whoops, wrong window. Where is my, there it is. So we use this CME Group's prediction probability chart. Anybody can go, it's a public chart. So from last week, the probability for 0.5% interest rate cut has further gone up a little bit, just a few percentage points. So talking to a couple of the banks and people in the financing space, they are almost certain it'll be another 0.5%. Again, I'm a little cautious, cautious on that. What I'm concluding is really a 1/4 point for sure, but 0.5% very likely, especially given the December meeting is saying there's another 1/4% cut beyond the initial in November cut. So if that ends up happening, it'll be 5.25% cuts this year. So looks like the cut is as steep as the rise was. It's definitely a good thing for our real estate transaction side. But of course, when the Fed is cutting this sharply the interest rate, that does mean they are seeing some, they have concerns about the economy. So, we just got to watch out for these as we do the deals. We are really, even though our view has been, in next 6 to 9 months, there's going to be a steep increase in rent just because of from a cost of home ownership versus the cost to rent a house. That is quite a big gap. So to fulfill that gap, the cost of home ownership is coming down with these interest rate. But I think one of the study I saw to bridge the gap between cost of home ownership to where the rental rates are, like the interest rates would almost need to go to 0.5%, like 0.5% to the consumer, right? Because just the 30-year principal payment would be big enough on a current median home prices. So, that's not happening. Interest rate cut is not going to quite make it up. So the rental rates will have to go up to kind of get in a range where the historic range has been. So we're a little cautious in our underwriting for rent increases for that perspective, and just from our underwriting, but we are starting to see interest rate quote with some buy down in high 4%. But we're still underwriting 5.25, kind of default agency on the underwriting. Again, these are all our views. No financial advice here. Please use this as a cautious guideline. Each submarkets and specific markets can be drastically different than the median and the averages that we look at and the overall global market. So focus on the local market also with the macroeconomic view in perspective. So, Sharad, anything else to add here?
No, it's good. I have a couple updates afterwards, but yeah, I'm in line with you. One thing to remember that just to kind of add, when rate goes up, it's a seller problem. When rate goes down,
I was going,
when rate
what is this the right?
and when the rate goes down, it's a buyer problem. And so we have experienced that before, but before that buyer problem becomes a buyer problem, we have about a year left because of the equity pullback. So that's the idea. Rate goes down, it's a good thing. Transaction will happen. So 2025, we'll see lots of transaction to happen. Not all of them will be a healthy transaction from seller side, but they will be able to sell it because the performance of the asset and the rate coming to a close. But transaction will happen now. This year, dominant part of the transactions were $70 to $100 million, which is institutions came. They took as many assets as they could under their belt. And now next year, we'll see a semi-institutional, larger teams will come. And then end of the last year, we expect everybody to show up. So we have about less than a year to go to get assets as many as we can. Back to you, Sanjay.
Thank you. Okay. Current debt rates. We talked about that. We're underwriting 5.25 with no buy downs, and 5 or a little below 5 with some buy downs. Major news. No big major news that I came across. Anything else you have, Sharad, there?
Yeah, I have a couple. I want to share this screen if that's okay.
Yeah, let me find this thing. This thing gets lost there.
I got it. Okay. It's going to be interesting when I bring it out. Please bear with me. And again, we're looking at purely from the data perspective. We're not trying to take any position or anything like that. Again, our role is to understand where the market is, sliding or siding or going, and it's time to stay close to it, right? So the first one is the multifamily, the rent growth. The point I want you to kind of take away, number one, look at the news, but then go 1 or 2 layers deep into the news that we have. The same thing is going to show up when we do underwriting. We can run a CoStar report, but there's a lot more to it underneath the report, right? So the news was today the apartment rent are going down, and it's kind of stabilizing at where they're supposed to be, which is right. During the COVID time, went up, then we stabilized as you went through. So underwriting perspective, all the assumption that we're going to make today will be, grounded by reality or closer to the reality than all the assumptions that we make today. So if you see anybody going up 10%, 20% increase on the rent, ask the question why, because we do the same thing. So, which is true, you guys have seen it, but the beautiful thing is it's kind of stabilized. In between 21 till now, we got hit by interest rate, the tax, and the insurance. Almost all the whole country except California and Florida has stabilized. And all 3 of them, California and Florida, is tax, not the tax, the insurance. Best of luck to them, right? So that's where we are. On that note, if we drill down to 1 layer down, which is this one, I'll make it a little bigger. This is what the by the MSA looks like. Now we went from a country to the MSA, then you have a local asset. So asset will play differently. But if you take away from here, the Washington, D.C., if you think about 3.5% already increased, right? But on the Austin, 4.5% decreased. So if you don't know anything, and if you want to buy one property and we have all the MSAs available, you go up in Austin because everything gets better moving forward, right? Versus Washington, D.C., you're riding the tide, and you'll be potentially against the tide. You don't know how long it's going to survive. So it's interesting way of taking a look at it. We're in Houston quite a bit. As you know, Houston is out of the, the beat down per se, and we have stabilized quite a bit. Now, Houston, we expect to stay steady and slightly follow the inflation as you go. So that's one of the things I wanted to show you, that, hey, market have stabilized. Even though on the news we can hear foreclosures and a bunch of more coming on the pipeline, but underneath of everything, market have stabilized. Whatever's supposed to happen happened. Banks pushed most of the deal next year, and next year when the rate comes down, we'll start doing some transaction because the prices will come close to wherever we at. From there, a couple of banks are selling their balance sheets at a very discounted price. We're talking to some of them as well. But all in all, that asset type that we are underwriting, everybody's underwriting, has a touch of distress, and it's going to continue till next year. So that's one. So we have a couple of projects in Austin, residential, commercial, that kind of stuff. That is there. And Dallas area, they have stabilized, and we're expecting Dallas to go up. We're expecting Houston to go up. We're expecting most of the Sunbelt to go up. Midwest has their time, but Sunbelt is going to come back out later this year. Later next year. So underwriting perspective, as long as we stay close to inflation, rest should play out, the way we expected. So that's one. Second thing, what we had, Sanjay, you want to add anything to it before I go to the second question? Are you good?
No, go ahead.
Cool. The second question we get asked quite a bit is that, the election's coming up. What's going to happen election, and what if Republican comes in versus Democrat comes in? How that's going to impact all this other stuff? So, and our position has been right in the middle. We don't know who's going to come, but at the same time, we could look ahead and trying to preemptively position our portfolio and asset, things like that. So one of the places that we follow, or I follow quite heavily, which is the University of Michigan. This is, again, it's a school, much more academia. It's pretty interesting to take a look at it. It's not, when we take a look at it, be a demographer, look at it purely from the data analysis perspective, and kind of extrapolate with the brain and see what happens if that versus something else. So I'm going to share the link in the chat box when you get some time. It's really cool to spend some time there. Let me see if I drop it up. So again, it's academics. We don't have any participant to it, but let me share it to everybody. Okay, so that's there. I'll talk about one of the reports that we have, which is the election expectation, and also the variability. So we do that quite a bit. Large institution, they will look at the politics and say, hey, I want to know who's coming, and I want to know how to position ourselves. I remember when the Trump was going elected for the first time, Shell, we do politics, right? We're in it for every single thing. We're running analysis, and we came out from the economist group at the global level. It says that Hillary Clinton had 71% chance of being elected. Trump had like 20 something, and it flipped completely, right? It is interesting how you look at the data, but data may be wrong, but there is some jiving to it as you take a look at it. So on that note, this one, the presidential election expectation, is pretty cool. What they did, bunch of PhDs do the work. The point is, what they're saying, that personal finances should not change depending on red versus blue. Better for economy, it's in the middle. Expected winner to the election, it looks like it's siding towards the blue than a red, right? But that's on surface, right? Then the question is why they're talking about what they're talking about. And this one gets interesting here at the very bottom. So statistically, this is what a takeaway I'm going to show you. This is the consumer sentiment and the election outcomes. So statistically, anytime we have a peak, red comes in. Anytime we're at a trough, blue comes in, right? And they kind of mapped it out all the way. So you can see it, peak and trough, and right here is the trough. So what they're saying is, statistically, if I don't know anything, if I just roll the dice, we expect blue to come in because I'm at the trough than that. And they're saying that it is going to behave very similar to 2012. So it just did that. Now, on that note, what's going to happen on the interest rate and how that property will play out? What it tells us that if you live in California, if you live in New York, it is the tenant friendly. So you are going to go through those rent escalation issues and all this kind of other good stuff. We live in a red state. We don't expect that kind of an issue. We don't think there will be any bills to be passed or things like that. But that's the highest level of answering the question that, hey, who's going to come? Answer is we don't know, but that's what it is. And that's what it looks like. Take it with a grain of salt, the way you feel like it. Again, it's purely from the academic perspective, right? I just want to share this one. As you get into it, we're in a commercial real estate. It's millions of dollars. It's not sentiment. It's about the data and kind of position us, accordingly. And then we're just looking at it. So I thought I'll share this one and chart with you. Pretty interesting when I read through it. I had a bunch of questions. What's the sample size? What's the validation? And what's the standard deviation? A bunch of other stuff. But it's a pretty interesting way of taking a look at it. So I'll stop here. Sanjay, back to you.
Thanks, Shrier. And hey, this is really, really interesting and really good. I'm an immigrant. I've been a U.S. citizen for just about I don't keep track, but about 10-ish years, I think now. And since I became citizen and started looking at more from a what impacts me, my family, my community, right? And my focus has been, it shouldn't matter who is it Democrat or Republican in White House, the citizen's life should get better, right? Irrespective of anything. From that perspective, it's the issues that I've always focused on and looked at. So the other graph that you shared, personal finance and economy, and this graph. So that's a really interesting graph, and how and more my conclusion is that from the way United States system and processes have worked, like the best thing about United States is that we are center on a lot of the things, even both Democrat and Republicans. Whoever president-wise comes in, what ends up happening is a very center, right? Just as an example here, Trump had a bunch of tax cuts. Biden continued and added to those tax cuts, right? And that goes so much against the Democrats' philosophy and what they talk about in the public. On the other side, Trump had all these tariffs and other things, and Biden took those away. And from a party perspective, it's the opposite, right? Republicans are always more free markets, more these things, and Democrats are more control. So just the way these things work, on the issues, healthcare, economy, personal finance, those are the things that affect our day-to-day lives. And which party does what. Interest rate, the biggest impact on our real estate stuff. Federal Reserve, at least so far, it's an independent body, right? Federal Reserve does not have, like all the other federal agencies, Federal Reserve is one of the only one that does not have to go to anybody in the legislature for permission to decrease or increase interest rate, right? There's some talk about changing that and stuff, but so our real estate side really continues more from academic, more from a data-driven perspective. And earlier this year, I think on this call, we have discussed that there was some speculations that while no rate cut is going to happen before the election, because Fed is going to seem like, are they favoring one party, other party, whatever. And even our comment at that point was, well, Fed is going to do what they need to do based on the inflation, based on market, based on economy. And that's exactly what they have done, right? So from real estate perspective, I think we're lucky to have very center approach. And that balanced center approach actually plays out well overall from a business perspective, and we take care of things as needed. So very interesting times for us as we evolve and go into this. Good news, good stuff there. Focus on market size class from massive capital side. We're still focused on the growth markets, focusing on a little bit newer class A products. So, but mainly on the growth markets that we focus on. Anything else to add there, Srar, today?
No, it's good. We'll talk about that a little later down the way.
Okay.
But we're good for now.
Corporate update, tax mitigation strategy. You want to go over this, Srar?
Yeah, so I can talk about it. So some of those here we talk about some of the other activities that we are working on. So you as a collectively know, we met up with a couple of attorneys. They do some trust, trust setup types, and they look like they're very sophisticated and they push the boundary quite a bit. And now we are going through bringing our attorneys to review their attorneys' proposal to see where we at. So another couple of weeks down the way, we'll know if we have that mitigation or not. So this is work out there because a lot of the investors that we're finding, they're higher income earners and they also have businesses and they pay $50,000 to $100 plus $1,000 just to the tax. This mitigation should help them out as you kind of go through. Again, this is in the it's pushing. It's like knowing the books and really pushing the words of the books. An interesting way of looking at it. We'll know more about it. What our position will be a couple of weeks down the way. So that's there. I wanted to bring everybody on the radar as you go. The second thing is this week on Thursday, I have a call. I belong to some other communities. Ryan Hashemi, he owns Snowball. He's one of the guys behind the YouTube. 5 billion views from his platform or from his videos. It's gonna take a session and give us an idea what does it take to be successful in YouTube. So if you don't know Ryan, dig around, pretty awesome guy. So we have an hour with him. It's about 30 of us. We'll sit down. So for us, it's a pretty interesting. I mean, I'm looking forward to it. The reason I brought that out, our ask will be look at purely from the academia perspective, where we have folks who are on the Instagram. I'm gonna pick on a little bit, and what those 5 top secret websites will make you millions, right? We have those. On top of that, we have the bigger guys that we know, right? And then on top of that, we have those guys that are really, influencing the market, but they're not on the surface. There are 2-3 layers out, and you find a way to hang out with them. So Ryan is one of those guys, 2-3 layers outside the thing. If you want to know him, or if you need to know him, you'll know him, but you're not gonna find him on the surface just because, right? So that's there. And the second thing is the speaking engagement next week. Keller Williams, they have a development summit only for the Keller Williams employees or partners or their brokers. I got invited to speak on the panel. Speak for 45 minutes to an hour. So I'll be talking about the capital stack and I'll walk them through. So I think Joe Williams, one of the founder of Keller Williams, we are potentially partnering with him. The partnership proposal went out last week. So as a part of that, I'm going to speak for an hour in front of them how to do capital stacking across multiple asset classes. And Bo is going to be on the panel as a developer as well. So this is our first time on a large audience where we're getting our dedicated time for 45 minutes and we're being invited in to do that. So this is where we talked about the marketing side, the 3 layers, right? Participants, then and on the panels, and then you speak, right? So massive, us as a whole, me, Mike, and Sanjay, we are getting those speaking engagement as we go. So I'll find out more, and as I see what the sentiment is, we'll pass on the information to the team as we go. So those are the highlights for next couple of weeks for the corporate level engagement as we go. That's all.
Good.
That's all I had, right? Mike, back to
Thank you.
Sanjay here.
And Shrar, I'm gonna bring this equity stuff up before LOIs and under contract. That's okay?
Okay, sounds good.
Okay, so I guess I can't move this. One
I think
second.
it's copy and paste.
Okay, there it is. It worked actually. Okay, so equity raising, Candela is we're still actively raising. This is a project Invest Houston. It's a 506B still, so no public posting, no public discussion on this. One-on-one or people you know only, closed networks. It is 506B until October 28th. So we do have a webinar on the deal tomorrow, right? It's tomorrow, 6 p.m. Central Time.
Correct.
Yeah, okay, thank you. So I think total, just a high level, it's the total raise is about 7 million. We have about $1 million in commitments. 506B target is about 2-ish million, and then we'll switch to 506C, and then wider marketing, a lot more marketing on this that will go on. Anything else to add on Candela, Schreier, Maria, Trevor?
No, it's a great opportunity.
It is. We love this. If you haven't heard, please let us know and engage.
And,
For
we're
Horizon,
moving to Sanjay. We're moving to. Sorry, thank you. Just to reiterate, it's a 506B. End of this month. We extended that for another 2 weeks or so on the B. Then we'll get into the 506C starting next month. So if you are raising, capital actively, then 506B and a C, differentiate that and talk to. Understanding your audience base based on those two. And if you're looking to invest in a B and C, that's the cutoff. And if you're thinking to raise and you want to go practice, and this is a scenario to practice. So all those, that new platform, all the Massive Masters, when we combine them together, part of the experience is to raise money. What we do understand is that everybody has to raise money independent to the size as a part of the operations. And to do that, you need to go practice. And this is our way of bringing deals to the whole platform by saying that go practice. So figure out what is working, what is not working, who are you talking to, what they're saying, what their sentiments are, and what you are designed to raise. And this is there as you go through. So Maria will reach out to each of you guys to kind of talk this through and put you on a timeline of how we will take you through. Let me take about another minute or so, Sanjay. So one of the difference or the combined, the strategy is group learning by doing. And a lot of things we can go practice and do analysis on it, but true experience happen when you're active and in real time you're executing whatever that we want to execute. So as the path of the journey, we will take everybody through it with the masters, existing masters. You guys have seen it, experienced it already, which is from deal flow to underwriting to contract to close to negotiating to putting taking over assets, in between raising money and pitching deals and all that kind of stuff. So Candela, and we have a couple other deals we're going to use as a practice pitch for everyone to go through it. And expectation is not the how much you raise, rather whether you have the right audience, right tool, right process, and you are comfortable raising money. So that's one of them. Back to you, Sanjay.
Thank you. Second one is that Horizon, I'd say Class C apartment in San Antonio that we're finishing the raise with a fund of a fund. It is 506C already, so this one, can be marketed openly. Good opportunity to increase your database, good outreach for investors, and new connecting with new people. Again, there is a webinar tomorrow on this, updated one, 7 p.m. Central. So Tuesday, tomorrow, October 15th at 7 p.m. Central Time. There is a community capital raise call on Wednesdays at 12 to 1. Maria, is this still correct?
Yes, I
Maria's
believe they have
not
a
there.
capital
Okay,
raising call.
okay.
Maria dropped off to talk to another person.
Okay.
so-
I think this may be earlier, 10:30, but reach out to us. That's we do this. Debt fund with a fixed return, no upside, no downside. We're getting ready to launch that. It's been there for a while. Equity fund, Class A new construction, some current and then some pref return. We're in works. This one is actively being worked, but not quite fully launched. So that's there. Anything else I missed or anything to add on equity side?
So just for everybody else, there are 2 ways we're raising money at the project level, which is each of the deals, Candela, Horizon, other stuff that we'll talk about. We're raising money so you can bring money into the project directly, and or you can invest directly into the in a project. Then on parallel, we have the fund way of raising money. So fund is an aggregator of money, so we can continuously raise and bring the money into the deals as well. So on the fund side, we have a couple of them very close. We're figuring, we're just aligning the process. Then we're in it. Really, I think it's gonna happen this month. We're trying to push that forward, debt and equity. So for everyone else, we're raising money both ways. You can be a fund of fund if you want to be a fund manager, or if you want to do a discrete event, you can raise for the money as well. And same thing as an investor, you can raise, you can invest directly into a project. And if you say I want to de-risk a little bit, then you can have you can invest in fund. So the fund will go multiple projects, different way. So that's the difference. Sanjay, back to you.
Sounds good. Thank you. LOIs and under contract deals. So on multifamily side, we had an LOI go out for Houston, just south of Humble area. That LOI go out. We're waiting to hear back from the broker. We were on a 10-ish million ask. We were about 1.5 million, 1.6 million below, and we weren't sure we will get it. And after the call for offer was over, we heard back most of the offers were in our ballpark offer range. So got a little more traction on that now. There is another one that we are pursuing through a wholesaler that came through. It's a bigger property, a lot more distress. So that one, seller was asking for some proof of funds, some approval. Arbor that we have worked with in the past for agency loans, they provided some sort of a letter we got from one of our contact, kind of showing a few $1 million in the bank with the seller. So looks like we may be the only one in the contest there. So some calls on that one. Their LOI sort of went out with our offer and price range that we are looking at. From our masters group, there are 3 deals that came in. One actually land development that we're seriously looking at. Thanks, John, for that. One multifamily, Melinda, thanks for that. And another land one, Melinda, that we're looking at and exploring. Again, as those deals come in, we're going to start to do those teams that we're doing and try to work those in the team. That way we have efficiencies, as well as, we are, Mike, Shirai, Sanjay are not the bottleneck for those. So we're moving those forward, and not only the bottleneck is the only thing. In addition, gives the experience, gives the opportunity to engage and work the deals. So a lot of stuff happening there to push those. Nothing specific to go into specific deals here today, just in the interest of time and everything else. On other assets, I think we have a triple net asset that is in trouble in Wisconsin. I think we're passing on that one. I don't see any way to rescue given how much it's already levered. So that one we're gonna have to pass. That's all I kind of have on my list here. Shirai, anything else to add from your side? Oh yeah, the 2 under contract. Yes, go ahead.
Right.
You can talk about those 2. Yes.
So from the massive side, what we do, I'll give you some ballpark number how we operate that. This year was kind of weird year for us, but usually we say we're trying to run 3 to 5 LOIs every single month, that pending. So we are in the flow of the deal, right? And we try to have 1 to 2 properties under contract at all time, and then 1 closing every 2 months. So that's how we operate that machine. We said, hey, and our deal flow is deal flow. We got to have lots of deals to get to the deal flow, and then 3 to 5 LOIs all the time. That shows that we're active, we're ready to buy deals, and then simultaneously, 1 to 2 deals under contract at all time, and then 1 closing every 2 to 3 months or so. That's how we're running the equation for now. We'll try to keep that for next year as well, and we'll increase as it goes. And then we have some bottlenecks that how do we throttle down, how do you dial up or down the takeover of the closing? And that's where the availability of the fund and then expected rate of return. So we kind of dial in those 2 to increase or decrease the deal flow, so we can stay alongside with market. On that note, we are doing some of the JVs. Interesting one, the biggest one we had, one of our partners got a deal or sent a deal out about 3 weeks ago. Then we made an offer in about a week, and then we put the property under contract last Thursday. We're sending the earnest money today. and that's going to be a JV deal very similar to Candela. It's like a price size $14-15 million of construction, about $17-18 million of total cost, and then it's a $5 million raise. And given it's a JV, we raised about $4 million already. So on that note, sometimes things happen really, really quick, really, really fast, and sometimes we just follow through the cadence of it. So it is important for all of us to stay in tune with our process and the cadence and the deal flow and understanding who we are. Are we playing on the acquisition side, operation side, equity raising side? So just stay tuned. I'm giving some long way of saying stay tuned. We're going to take you guys through a process of it, and our goal will be take you guys from inception to closing an operation, disposition, the whole cycle as fast as you can. And that's going to require you to kind of participate with us for all the things that we're doing. Just hang with us and we'll go from there. So that's there. And multifamily one, Sanjay, on the Houston one, how about the San Antonio one? Are we making a push or is out? And Dallas one, you walk in today, right? Or tomorrow with another project?
Yeah, so there's one in Dallas. I mean, we don't know what it is, so we'll see. San Antonio one I think is out. There is just the seller is I don't know. I think they have money, so they're just playing. So we're not yet.
Let them play. Okay. So point is we do JV, and also we do syndication, and we do Class A, and we do Class B and C value add as well. And we are in the thick of all the deals. Like one of the things, what I would say, me, Mike, and Sanjay, we are into the deals. Like, one of our massive masters sent a deal out over the weekend. It was a land play. Fantastic, you guys are looking at it. Our goal will be not to share with everybody else where you can kill the deal right away. That deal that we saw has been floating in the market for at least 2-3 months. I know the owner, they're asking for $5 million. It's worth maybe $3 million. And then we go through the whole process. So we'll take you guys through that. How do I not do a deal? And that place first. And then if I don't know, if we do know how to not to, when not to do a deal, then by design, we'll know when to do a deal, not the other way around, where we look at it, try to say, I want to do this deal. Then we don't know when not to do the deal. It becomes emotionally troublesome, right? So just hang around with us, follow the cadence that Rimsha is coordinating with everybody else. And then, you'll be in a thick of a lot of deals sooner than you think. Back to you, Andre.
Thank you. So a lot of activity on that side. And we're hoping to streamline process as we form the teams. So project focus perspective, thanks Shariah for this. We are focusing on our massive buy box, primarily multifamily side, where we are focusing more on 100+ doors, 80s or newer, no coastal. I think we'll do flat roof on exception basis. Certain median income, Texas, Arizona, Colorado. We used to have Florida as a focus, but out with that. Georgia, it is a semi-focus. It may come back. Just from a boots on ground perspective, it's there, but those three are the primary. Arizona suffered quite a lot over the last year and a half, and we see it as coming back. Arizona tends to be more volatile, it seems, than Texas. So it goes up more, goes down more, and then it's there. That's the primary focus. Of course, the land and development side. We've got that focus with triple net, mixed use type of developments. Not really much on apartment side on the new development. From a KP perspective, we KP balance sheet liquidity from only on non-recourse loans, 8 to 15 million deals, and the consulting on the deal. If you'd like to submit a deal to us, massive.capital, submit online. It goes straight into the napkin template on Monday. Can email to deals@massive.capital. Instead of emailing me or Shariah or Mike directly, best to have it to this email address. That way, at least it gets in the system and gets reviewed. If you do email it, include a little more information as much as you can. Under your underwriting, why it's good, why do you like it, why sellers selling, of course, a OM if there is one, and T12 rent roll are the key to make any assessment. We always advise don't just forward an email from somebody else and say, hey, what do you think? Give us your opinion. Why do you think it's good? That will get prioritized if we have that information. Just a forward, especially daisy chain, more than likely we have it in our system. We've had it in the system. One of the wholesaler who's been sending us, and last week he said, anything he has sent, we have had in our database. As soon as he sends it, we go to monday.com and look if it's there. If it's there, we tell him, look, this was they're asking, this is where we were at. If you got something that's below this or at this price range, then let's talk. Otherwise, save your and our time both. So it's good to do that. And of course, the big part of getting into the deal a little bit is the learning aspect, right? That's when you learn, when you say, hey, deal is good because of A, B, and C. You may be completely off, but you learned and grown from there. So that's a big piece. Everything we do today is preparing for tomorrow. A lot of the LOI that we were talking about earlier may not work out, but those deals come back 3, 4, 6, 9 months later, and we are the last group standing, still willing to look and consider. That's a big deal, and that's how a lot of deals happen in commercial space. So don't give up, don't walk away. If you don't get selected for a deal, postmortem is a big aspect to focus on there. So typically we try to turn around 2 to 3 days or less, but 1 day is the target. Okay, anything else here, Shariah, before we wrap it up with events?
No, I think we're good. So my request is stay with us. We are bringing both the teams together. It's a learning for both the teams, but we plan to execute and get out of that initial integration in less than 2 or 3 weeks or so. Sanjay, back to you.
Sounds good. Kishore, yeah, all the flat roof, we can talk about that. It is a problematic a little bit. It's got good aspects in some ways, but so there is a SHE event in Austin early November, and Orlando. Is Jasmine there still? If
No,
not,
Shay's not there.
okay, that's okay. I think we'll communicate. You get our communications. For big things in the next 7 weeks, Shariah, you want to share your focus?
Yes, we have a couple of things. We're focusing on the deal side. We have Candela and Horizon. We are placing that in a closing scenario in about next 2 months or so. Candela is a Class A triple net, as you guys know, and the Horizon it's a Class C plus value add in Horizon. One has depreciation, the other one has velocity of the return. Those two. Underneath that, our focus this week, next 7 days is the integration of both Big Dog and Massive Masters, both on the front end and on the back end tools and a process. There's quite a bit of work that's happening on the back end with the new website, domain, process, videos, all this other stuff. Our goal is to bring that education platform. It's one of the best in the class where none of the education platform will have what we have, both from the velocity of the deal and how we go about it and the tools and the system and the process. So those are the 2 primary focus that we have. And then we started working on the third one. Slowly, we triggered up the 2025 business plan. And you'll see us talking about that, where you as individual think of you as a business itself, and then think about the 2025 expectation that you have out of that, both on the revenue, cost, and time allocation side, and get that business plan going. So you'll see us talking more about it. What is the plan for 2024? How do we close the year? And what that we have done, what that 2025 will look like, and then line your work and the time and that focus and just against that one. So those are the 3 things that we're working on. So
yeah,
John has his hand up.
Okay,
John,
go ahead. Yeah, we'll go into questions. Go ahead, John.
The project, the Kendall, the TripleNet referring to, is it like a ground up development, or where can I gain more information?
Sounds good. We'll have Maria reach out to you, and she's going to give you the whole thing. And Maria is also hosting a webinar.
Yeah.
and we'll go through it's a Class A retail in KD area, all
Okay.
checks out. But
The
John, I get the action.
okay. All right. Thank you.
Thanks, John.
Thank you. Very good question.
Yeah. Any other questions, comments? 9:51. So we'll
Yep.
try to wrap up here.
I know you guys are working on getting us the access stuff. Any timelines? Sure.
Yeah.
When do we expect?
Next week.
Yes.
So next week is our timeline to give you all the access and everything else, and then sometime best case this week. No, sorry, our moderate case next week, but we'll start communicating sometime middle of this week, and we go. And on the access side for everyone, we're taking through a journey. Everybody, one of the learning that we have is early on, up until last month, we gave everybody at the same time, and that was like whoa, right? So right now we're taking it through first getting comfortable with the meetings, then getting comfortable with the team, and then getting the tools. It's a sequential event. So just stick around with us. We learned quite a bit. So at the right time, you'll have all the information that we need. So good question. Thank you.
Thank you.
Cool.
All right.
What
That's all we have for today, guys. If no other questions, we'll wrap up. Happy Monday. Have a good week.
Happy hunting. Thank you, everybody.
Thank
We'll
you.
go on the
Thank
first
you,
of the week.
guys. Thanks for
Thanks.
joining.
Have a good day.
Cool. David, it's on Thursday. I'm not sure what time, at 1 o'clock or something like that. But once I get the information, I'll share with everybody. I'm trying to get the transcript. So
Hey, Sanjay and Sharia, this is Alok. I have a question. So we have this week the same meeting what we had last week, or this week the schedule got changed?
I believe it's the same as last week.
So we will have
There's some
same meeting.
updates going on. Yes, same meeting. You will see the title of the meeting being updated. So our focus for a particular conversation will be different, but the timing wise will stay the same. Some of the meeting notice that Mike be sending out is updating the names of it.
So like what we had the meeting on Tuesday for this deal review and all those Tuesday, Wednesday, and
That's right.
Thursday, Friday, similar, right?
Yeah,
Same time,
yeah,
same link.
the timing 9 to 10 stays the same. So I'll give an example. Like Tuesday, it's the underwriting, right? We look at the team level underwriting. Then on Wednesday, we'll talk about the same time, but we'll talk about the capital raising and branding, right? Then on
Right.
Thursday, we'll talk about asset management. So 9 to 10 stays the same. It's the topic of that meeting will be different. And then to replace some of this other underwriting focus, we have 2 additional meetings that Ellen will run that has the underwriting focus completely. So the total time is more, I believe, and the conversation right now much more specific. And then Mike is updating the meeting notices accordingly to the title.
Yeah. The morning time stays the same. Alok.
Yes. Yes. Hello.
Okay.
So our foundation is the same as the process of everything is on the deal, and by doing it, so go raise, go negotiate, go put the LOI in, go run, right? It's not gonna go away, and it's just we're distributing the time, adding more resources to make sure that we're supporting everybody the right way. Sounds
Any
good,
other
and more
questions,
exciting
guys?
things are coming up. So just stay tuned.
Yeah.
Let me know if it's not the time to ask this, but you said you're joining the Cree group with Phil and Shinoa. What does that mean for the Cree members?
We are bringing together everything under Massive Masters. So moving forward, Cree will retire, and they will move everybody into the Massive Masters. We're going to be one team. It's called Massive Masters, and that's how we're gonna go. And we are learning from the both side of it. So we are taking our Massive Masters platform as a foundation, wrapping the Cree's best learnings to kind of complement the process that we have.
Okay.
Are you part of the Cree?
I am part of the Cree.
Cool.
Oh, you are? Okay.
Which is why I was struggling to purchase your program as well, because I'd already bought into the Cree for the whole purpose of learning commercial real estate. So
yeah.
Awesome.
And you see the difference, right? And also see the complementary side of it, which works but doesn't work. So we can collapse it one Massive Masters moving forward.
I mean, Massive has the credibility from my perspective. You have the commercial real estate credibility that the Cree they have they're individuals that like know this asset class, but not to the extent that Massive has experience from my perspective in being in the CRE for almost a year now. So, but they
Josh,
have
thank
the
you.
marketing aspect to bring in the new students that Massive is lacking. So I can see how you're joining up with them, because Phil and Shinoa do a insanely good job of bringing in new people. So yeah, I can see the synergy.
Yeah, and I think it's the more than the new people. I think the team process and the journey is a lot cleaner, lots more streamlined. That's combined with the real deals, it's very powerful, and that's really a big part of the overall synergies.
I mean, and they have an established training program. I mean, they've been doing it for 11 years with Big Dogs. So, I mean, they have a process for their training program. So there's, if you guys can come into that as well, yeah, I can see the value also.
Yeah.
And it gets really, really exciting if you think about acquisition, right? Now we have two teams together. We have a good, solid base of folks in our program now. Now it's the acquisition time, right? It's about market share. Go market your territory, gain, step up. It gets really fascinating when you kind of think about that way, right? And so you are in and right now we're in a competition, all of us, right? Massive Masters. It's to give us 6 months. We're out. Brokers will know. Lenders will know. They will know you. When Josh shows up, makes an offer, it's no more. I mean, you've been in the game for a while, right?
Yeah, no, but I hear what you're saying. The team behind me.
Yeah, so it gets really meaningful and interesting. So that's when we saw that with the right support made a lot of sense for us to partner. So, but Josh, thank you.
I know Massive was not looking at RV parks and mobile home parks and those asset classes. So, which is a large, well, it is a group in the CRE. Yep. How are you going to integrate that?
So, Sanjay, I'll go, then you can back me up. So the philosophy will stay the same, where that only people who get to share or lead a team who has been there, done that. With that definition, that RV park checks, right? That group that we have, they're leading it, they're doing it. On the flip side, I could also see a natural gravitation to the RV parks, because it's like, wholesale type of mindset. You can call, fragment the segment, and you can go buy one. And given the student population, I could see a natural migration toward that way versus using the path of least resistance, right? So we could see that. So that will stay. We're still gonna come in, do an RV park, but we're gonna make it even better. We'll say, hey, take our underwriting model and go, right? Keep on buying it as many as you want, absolutely no problem. But understand at the same time what the difference between an RV park and multifamily. Understand that you're going to hit the ceiling at some point, but others you will not, right? It's a mom and pop lifestyle versus not. Or if you want to grow up to an institutional different type. So I think that flavor we're going to bring in, but the philosophy will stay the same. Everything, from the Massive side, if someone wants to raise money with an RV park, us, the principal, have to sign off by saying that we looked at the risk, we looked at the team, we looked at the play, made sense, validation, go raise. So that will stay on that. But on that note, we'll bring the same structure. We have a self-storage segment. We have a flex space segment. We have land development segment. We have multifamily segment. And then we're bringing in the right amount of leadership to lead that whole segment through it. So we learn from the RV park. Now we're going to amplify everywhere, as we go. So we're not letting go. We're going to buy more across all the asset classes as we can, but we're going to fine tune so that we can get better deals, more deals as we go. And that's why you'll see us talking about 3 different kind of buy boxes. What Massive will buy and lead, one Massive will support, do a KP, another one Massive approves, so Josh can buy it all by himself and runs it. Our job is to get Josh in the ownership as fast as you can, whatever the path is, right? And so that's the idea. Sure. Hope it's making sense for everybody. So it's a good question, Josh, by the way. Thank you.
Sure. Quick question. The seller on Spring texted me asking me to call. Any interaction, anything I need to know? You want to call separately?
So quick update on that one. I went by, but I looked at the wrong property.
Okay.
I looked at the building on the side, not the land by itself. So I want to put my eyes on it again. That's going to be Tuesday, not today. So on initial underwriting, everybody's in a 50-50 mode.
Okay.
It makes sense. It doesn't make sense. We don't know how to swing it. So both the construction team and us were in a 50-50 mode. This
Yeah.
Thursday,
Yeah.
our construction crew, including the architect, were walking another property that was just won on the contract, and
Yeah.
we'll talk about this project then.
Okay.
And so I may reach out to, or I plan to reach out to the seller via text first tomorrow. So I'll
Yeah.
have some time. I'll try to get on a phone call. Just let her know that you are talking to a local developer.
Yeah.
Give them 3-4 days or so. One of
Yeah.
them will reach out to you and start the engagement as you go.
Okay. All right. Okay. Thank you.
And again, on that note, I don't want to go with the false hope that I want to do a deal. I want to know that I really don't want to do the deal. Or
Yeah.
if then we go back and give her a clear message. Hey, do your thing, either with us or without us. That's all.
Right. Yeah.
Thank you, John.
Thank you.
Yes,
Hey.
my name is Gary, and I'm also part of CREE. I just joined. This is my first call here. I saw the email this morning, and then I jumped on it. So a couple of questions. Thank you for this collaboration. I think this is very helpful for my journey going forward. And I see that there are some WhatsApp groups I joined. So I'm a W-2 employee. I work a lot in the evening, and then also try to pitch in during the week, during the business hours as well. But if I miss these meetings, is there any recordings that I can go back and refer? And then where are the tools we talked about on last week about the tools like writing tools or anything like access, where do I get access to those tools? So those are two questions.
Yeah, Gary, all of these calls are recorded, and you were part of the CREE program, right?
Yes, I'm part of.
Yeah, so on CREE side, they had a website where you guys had like links with access. All of this, that website will be rebranded to a different new link.
Okay.
And calls and everything will be available there. Similar organization as before.
Okay.
We think that was a lot better organized, so that's what we're adopting from there.
Okay.
But calls will be recorded and available. Same thing for the tools. Tools will be available there. There are a lot of things. So like Sharad was saying earlier, we didn't want to overwhelm everybody. So we are kind of doing it in steps. But that portal website will be kind of the central place to access the links. Of course, that's mainly for everybody who's actually part of the paid program. So not outside of that, yeah, which you already are.
Yes. Yeah, I know. I think Millionaire Masters Club or something, there's a website. It has recordings of every Wednesday calls and Monday calls that we have. Now, I'm assuming it's going to be new domain, and then all these calls will be posted there. Okay.
That's the plan, yes.
The new website is massivemasters.com. Our dev team already met last week. We're working towards it. So again, give us about 2 to 3 weeks. We'll settle the integration on the backside, and then front and back will come together hopefully by first week of next month. We're trying to go as fast as you can. On that note, Gary, the biggest delta, the difference between that and the CREE program and us is we're a lot more hands-on. Even though you're thinking about it, but we're going to bring you in anyways. So we'll say, come do the things as you go through. And on that note, for everyone, we are sending out some surveys, fill them out, and give us the information so we can place you the right way as you kind of go through. Because when deal happens, it happens, right? Even though we're W-2, but deal comes to first priority, then what we do, we adjust. We say, hey, Gary has a job, which is all of us, we did at some point, right? And then let's find a way to park him and within the critical path of the deal so he can do what he wants to do. And also at the same time, understand what he thinks he should do versus what we think we should do and share notes. So we can get him to the ownership place as fast as you can.
Got it. Okay. Yeah, I'm a part of a CREE multifamily group, and then I do a lot of underwriting. I use like a Michael Blank. I'm sure you guys know Michael Blank template. I use that a lot, and I do underwriting. I did underwriting. I didn't find a good deal so far, but I do underwrite a lot of deals. I'm hoping the new tools that you guys provide will even help me further in that journey.
Cool. And awesome. Thank you. On that note, just let us know what the end goal. Right, and then we'll position accordingly. Underwriting, it's a sequence. Still, I mean, it's all starts with finding the right deal, underwriting, and putting the money, going through the process, and then it's ownership of it. and
Mhm.
that's the longest and the slowest burn, and then you exit.
Yeah.
So we look at you from the whole journey of from the beginning inception to your disposition, right?
Yeah.
And then we build you up on the whole thing. So just stay tuned. It's gonna be interesting. At least
Yeah.
we believe it's gonna be interesting.
Yeah, I
And,
think so too. Yeah. Mhm.
Good question. Thank you. Any other question? Hey, Jakin.
Morning, sir.
So, yeah. What's up, buddy? How are you?
Pretty good. Sure.
Oh, sorry.
All right, guys, it's after 10. We'll drop off here, and have a good week. Thank you.
Thank you. Thank you, everybody.
Bye.